بسم الله الرحمن الرحيم. الحمد لله رب العالمين، وصلى الله وسلم وبارك على نبينا محمد وعلى آله وصحبه أجمعين. اللهم لا علم لنا إلا ما علمتنا، فعلمنا ما ينفعنا وانفعنا بما علمتنا وزدنا علما يا كريم. My dear brothers and sisters, Assalamu alaikum wa rahmatullahi wa barakatuh. I can see Syra here. Is anyone else in the room? If you're here, send your salams, inshallah, please. Jazakumullah khairan. Oh, there we go. Kulsuma, assalamu alaikum. Welcome.
Wa alaikum salam. How are you?
Samir, you made it, man. Allahu Akbar. I'm good, bro. How are you doing?
Good. No, what happened? I signed on my other laptop. I was in, and then I realized, wait, where are my slides? And I realized it was on my work computer. So
Got you.
so jumped off real quick.
Okay, Samir. Can you check and see if you're actually able to present? So at the bottom, do you see a symbol? Yeah. So try that out, inshallah.
Let's see, slides, videos. I guess share screen would be the option here. Hold on, let me see. Where am I? Okay, if I share screen, do not show me this tips again. Choose what you want to share. Oh, no, not Chrome tab. Window. Okay, I think I've got it.
Got it?
Okay.
Perfect.
So what I have is this.
Okay, there we go.
You know, just kept it straight to the, I just omitted the other slides, that's all.
Got you. So, Samir, I'm going to let you introduce yourself and what you do, inshallah, so everyone knows you.
Okay.
And I'll let you take it from here, and I'm going to disappear video-wise, but I'll still be here on audio, inshallah.
Alrighty, not a problem. All right, assalamu alaikum, everybody. My name is Samir Sarmas. I was asked by Sheikh Navaid Aziz to come on and speak to you all about the different kind of accounts that you can invest into. Specifically, I understand some folks may have questions about retirement planning. So let me tell you a little bit about myself. I've been in wealth management for over 20 years. Started my career, about 2 years ago out of college. Working for banks, traditional banks, there was a bank called Wachovia Bank, which became Wells Fargo. And then I went on to JP Morgan, which was probably my longest stint there. And over there, I worked with high net worth individuals, helping folks plan for retirement and other goals of such. So, and then I had worked for Amana Mutual Funds, which some of you may have heard of. I was with Saturna Capital as the parent, as the company that manages the fund. So I worked for them for about 5 years, specifically in obviously Sharia-compliant, because that's what the Amana Mutual Funds are. They're funds that they are the initial or the pioneers in Islamic finance in the United States. So got a chance to work with them, and now I work for Farther. Farther is a digital wealth management firm. We work, we have a team that we work with, but I specifically work in the Sharia compliant area. So I help the folks who, need help with any kind of planning, and I employ Sharia compliant products out there. And yep, that's about me. So let's get into this. I don't want to take too much of your time, but types of investments, and if you're familiar with these, please forgive me, but just wanted to cover it for those of you who may not know what these are. So there's different kinds of investments. Their mutual funds are probably the ones that you probably hear about. And what are mutual funds really? Mutual funds are a group of stocks. Okay, it could be a group of bonds, but we stay away from bonds because bonds are based on riba, which we don't really mess with that. So mutual funds are out there. You have Amana Mutual Funds, Azad. You have all kinds of different funds out there. And then you have managed securities. Okay, managed securities are pretty much, if you work with someone like me, who's a wealth advisor, financial advisor, we create portfolios using different securities, and we actively manage them. Okay, so that's something that we do for our high net worth individuals. Mutual funds work great. They're simple. You put your money into it. You can choose a number of them and kind of create your own portfolio. But some folks who are looking for like that deeper dive into investing, that's what we use as managed securities. Okay. We end up diversifying with different holdings, not just the stocks that are available through the Islamic funds. We may look at some real estate holdings, and over to the right, you'll see it says multiple asset classes. What that means is there's different companies doing different things, but they're classified under different, so blue chips stocks are, familiar companies that you've heard of, like Microsoft, Apple, things of that nature, that have been around a long time, and their capitalization, their market capitalization is very large compared to their other peers. Then you have growth stocks, what are meant just to obviously grow. Capital appreciation, that's something, for long term. If folks are investing, they're investing for retirement, you'd look at employing some growth stocks in that portfolio. Emerging markets are companies, international companies, which are still developing. They're not developed, but folks will look at seeking some international exposure, maybe to Asia or the Southeast Asia or the Middle East. So we can look at some emerging markets, and our Sharia compliant companies out there do have ETFs that focus just on emerging markets. And for myself as a professional, I would use that as part of a portfolio, a very small part, typically between 8 to 10%, somewhere there. But I hold it emerging markets. In the sukuks, you have their Islamic certificates. Sukuks are kind of like revenue bonds, halal revenue bonds. We don't really use the word bonds, but they are similar. But the reason why they're Sharia compliant is they're certificates that are based on profit and loss. Whereas traditional bonds, you're buying a bond, it's an IOU. Like pretty much you buy $1,000 bond, they pay you a fixed interest rate on that bond. And so that's why a typical bond, a traditional bond, wouldn't be Sharia compliant, because it's paying you a fixed riba, a fixed amount. So some of the reasons people invest their money is to obviously grow it to meet certain goals. Now, one of the main goals, if you have children or you're a student who's young and are trying to put some money away for college, this is something that's important. There are certain accounts in the U.S. that they help with saving for college. So let's get into that. So you have a 529 plan. 529 plans are very popular because you could put a large sum of money in it and have that money grow pretty much tax-free, and then when you take it out for college, it comes out tax-free, right? So you don't have to worry about, and I'm going to specify, when you take it out, it has to be used for college education, your books, tuition, room and board. There are certain items that are very specific to what it could be used for. Okay. And so the max you could put in, and this is per individual. So if you're a married couple, you could put in twice that amount. So you see 18,000 there for 2024. So technically, if you're a married couple, you can put away 36,000. So I'm sorry, 36,000. And the only issue with this is there are limited choices as to investing in a Sharia compliant manner. If you work at a company, and we'll get into 401ks in a bit, They give you a menu of investment options. Like, here you go. This is the limited menu, and you have to make those selections based on what you see fit. Or they may have something like what they call a target date fund, which, hey, you're going to retire in 2050, so this is the fund you should put into. So those are the kind of funds. So similarly, these 529 plans have those limited options, and they may not be Sharia compliant. However,
okay, I found this on the web for C 18,000.
Excuse me, I don't know what that was, but I just got interrupted by Siri. I apologize. So the well, I lost my train of thought. So they have very few options, and so you can, try to look at what they have and try to avoid bonds. And that's what I tell folks: if you're in this, if there's no other way out, just try to do your best and pick like technology and healthcare stocks. And again, that doesn't mean it's Sharia compliant at all, 100%. But if you're just trying to do your best and you're stuck in a situation, I always tell folks just get out of anything that has bonds in it, number one, and then secondly, avoid any industries. So, what can you do if you're looking for an alternative? They have something called an education savings plan, ESA, also known as Coverdell. That's another term they use, and it's the same kind of account. You could use this for higher and primary education. Meaning you could use this for, like, let's say you're putting your child into maybe an Islamic high school or something. You could save that money for this. So there's a limitation. It's $2,000 per child per year. Very far off from the $18,000 per person. So this is a $2,000 per child per year. This you can create your own portfolio, so you're able to select any of the halal options that are available on the market, and make sure it's Sharia compliant. There are and it says you have to distribute by the age of 30, unless the child is a special needs beneficiary. Okay, contribution deductibility means that if you're making between that range, the 190 and 220 for joint filers, you won't be able to open this kind of account or participate. And these rules apply for a Roth account as well. If you've heard of a Roth account, there's limitations, but then there's a backdoor way of getting into a Roth, even if you are making more than this amount. So if your income is, and I want to be specific, this number is your MAGI. So it's modified adjusted gross income. That's what that number is. So that's after everything, that's what your adjusted gross income, the bottom line. All right. The other kind of account you can open is the Uniform Gift to Minors Act. It's a UTMA or UGMA account. These are custodial accounts. So that one of the parent or whoever the adult is taking for the child, only one person could be the custodian, and then you could have a successor custodian. So let's say you want to open a custodial account for your minor child, you can do so. Sister Fatima could be the custodian for the child, or Brother Ahmed could be the custodian for the child, and then if then you could. The other person could be a successor custodian in the event of a death or something of the adult. So this account you can put away. Again, it's the same rules: 18,000 per year per child. The contributions, and now this is where a lot of parents have an issue with this account, is because once they turn age of majority, the account becomes the property of the child. So every state is different. Age of majority could be 18 years old, it could be 19 years old, it could be 21. It depends on your state and what's considered age of majority. So once they reach that age of majority, the account becomes their property. It's theirs. There's no tax-free benefit here for educational purposes, or there's the only thing is you have a flexibility with this. You could use it for anything It could be used for college. It could be used for starting a business or buying a piece of property. Whatever the child, once turned age of majority, could do whatever. There's no restrictions. However, there are no tax benefits when they take the money out either. They will be taxed, like the gains will be taxed, okay, I should say. Anything beyond the contributions, any profit that was made in the account, that would be taxed at what they call a kiddie tax. And that kiddie tax is a very small tax. It's there's different tax rates and it's calculated a little differently. It could be about, it depends on the account size and how much the profit or the capital gains were in that. So we'll move on here. Okay, the reason why people would want to get started early here, what they say is for a cost of a fancy coffee per day, about $5. We'll use that as an example. For about $5 a day, if you put money away, this is kind of like where you'd be at the different age cycles. So by the time the kid turns 18, you'd have about 34,000, saved up. And this is using a average of a 7% return. So nothing crazy, but just showing you the power of compounding here. If you're interested in learning a little bit more about some resources available to the community, you could look at any one of these websites. Feel free to screenshot this. I'll give you 5 seconds here. You've heard of probably ISNA. Okay, ISNA has some resources and this Islamic Scholarship Fund. So folks are always looking for, hey, how can my child participate in any different scholarships available? So these are some resources to really look at and see what's around to help. Right? Everything helps. Every little bit helps. Let's get into retirement now. So I get this question probably most of the time. Will I have enough money to retire? So the earlier you start, same thing as a child saving for college. The same goes for here. The earlier you start savings. So how would you fund retirement? Okay, so these are different kind of accounts: 401ks, IRAs, and HSAs. Annuities, and we put that in there. Most likely not Sharia compliant. Stocks and bonds. Again, I'm putting bonds in there only because, and CDs as well, because people sometimes come and ask about that. Okay, brother, I have this bond. I have this treasury bond. Brother, I have this certificate of deposit. So let's just include it. And I'm just going to make the disclosure that CDs and bonds most likely are not Sharia compliant because they're based on interest. You have mutual funds, real estate, and life insurance cash value. So, saving for the long term. Power of compounding. If you started investing about $6,000 a year when you started in your, let's say, mid-20s, you finished school, you're in the workforce now. Let's say you worked about like 3 years, a couple years right after, and you start putting your money away, let's say when you're 23, right? 23. And here you can see a chart, the 3 different lines here, 25, 35, and I'm sorry, I shouldn't say 35, it's like 34 or something like that, right? Yeah, it's 34. So that's 24. So 24 years old, and then someone who's 34 years old and someone who's 44 years old. If they start at different time periods and they put, the $6,000 a year, where would each one be when they hit 65, right? 65 is the normal retirement age, so that's why they're using that number. Of course, there's early retirement. There's also delayed retirement, which, you could work a little longer and your Social Security is a little bit a bigger check. So the point of this is, look, the earlier you start, the more you'll have saved for your retirement. And again, $6,000 a year is, for some might be doable. They just don't do it, or it might be a struggle for somebody. And this is where I'll say, any little bit you do can help. If you even could put away 500, if you put away like $100 a month, right? So that will get you $1,200 in savings per year. Just putting that and putting it into some kind of a mutual fund or some kind of a a Sharia-compliant investment. This is assuming a 7% return. I mean, I think this is very conservative given what I've seen over the last, few years. I would like to say that, investments have done better than that, whether it's 3% more or 10% more, depends on what kind of investment and what kind of risk you're taking. The power of compounding, this reiterates the previous slide. Less is longer, more is later, right? So the less, so you have to put in less when you start, earlier in life. When you start later, you have to put more in, right? More in there to catch up. Okay, employer plans, a very, very important topic here for retirement. One of the questions I get all the time by my my fellow Muslim brothers and sisters is, how can I invest in a halal manner when my employer gives me these limited options? So let's get that out of the way first. What I will say is 401ks and 403b plans, these are similar. They're one of the same, and you might have heard of 457 plans. Some of you might have that, depending on who you work for, because depending on if you're working for a school, hospital, or a government agency, you'll most likely be in either a 403 or a 457, and some may still have a 401k. They're all one of the same. So when I talk in this slide, it's about everything. So what you can do is reach out to your employer, and if you don't have any Sharia compliant options there, and usually it's human resources or the plan administrator. So let's say I'm going to use Fidelity because they tend to have pretty much a good market share on 401k plans with companies. So let's say your employer uses Fidelity. You could contact your rep at Fidelity who manages your plan and ask them for a self-directed brokerage account. Okay, I'm going to repeat it. Self-directed brokerage account. That is within your 401k plan or your employer plan here. And the reason why you'd ask for that is because you have the flexibility of choosing what investments go into your 401k. So if you're saying like, I can't invest into anything because I don't trust like the options that they have, you can tell them, look, and they may ask, why do you want to do that? Oh, because, I want to invest into companies or investments that are aligned with my moral values and my faith values. So, and then I've gotten maybe like, a handful of people that will say that they don't offer it at all. And that's because they probably didn't have that as an option within the plan when they set it up with the employer. So at that point, I try to tell folks, look, it's up to you, how you want to do this. Talk to your Sheikh, talk to your financial advisor. But what I would say is look at the options and try to see what's best. Again, healthcare, tech, avoid any bonds. And then if they offer ESG options, which is environmental social governance, or any socially responsible funds on the menu, I would take a look at that and see if it's anything that might be aligned, and again, Allahu Alam, this is not religious advice. This is more of just kind of how to approach it in the best manner. Because the other thing that these 401k plans, they give you, they match, right? So that's free money. So the company will encourage you to put money away from your paycheck every year. There is a limit. There's like a maximum of $23,000 you can put away, up to $23,000, and that doesn't include the match that they do. That's just outside. That's your contribution, and so then the employer may match, a portion of that. They may say, "Oh, we do a 3% match if you do 5. If you put in 5%, we'll match 3%," which is great. So it's free money. The other thing you may see is a Roth option in these accounts. My recommendation to anybody, especially if you're just starting out, is go with a Roth option if available. The Roth option allows you to put your money away, and it grows. That what they're doing is they're taxing it up front. They tax your contributions, right? They're going to take the tax money up front. But now, let's say you have, a nice 20-year time horizon, or 25 years. Imagine how much money you can say, how much money you're compounding in your investment. So, what's nice is when the money comes out, or when you do decide to take it out upon retirement, it comes out tax free. So, like, you're not paying any taxes on on those gains. So let's say in the lifetime of the plan, thousands of dollars that you're accumulating because you put the money into an investment, and that comes out tax free. I mean, I think that's great. However, like I've said, they do take the taxes up front. So that's where they're getting it. They're getting your taxes on your contribution, but not on any of the gains that you're making. So definitely something to look into if they offer it. Okay, outside of a 401k, you have traditional IRAs. Traditional IRA, and IRA stands for individual retirement account. So don't, if you're ever asking, oh, can I have a joint account with my wife on a traditional IRA? The answer is no. This is individual. So remember, IRA stands for individual retirement account. It's for each person. And so they also have limitations to how much you can put in. So tax deductible contribution limits. So they limit you to $7,000 for 2024, which is, they raised it by 500 from last year. It was 6,500 last year. And so if you're over 50, they have a catch up. So you can do actually up to $8,000. So it's an additional 1,000. So this money, you put it away. It's something you can control the investments because you could open it anywhere, and you could put the money into wherever you deem Sharia compliant or whatever your objectives are, and it grows tax free. Okay, so now when you when you take the money out, when you take the money out, you're going to pay taxes on the capital gains, okay, on the distributions. So the one thing is, before you're 59 and a half, they will hit you with the penalty if you do take this money out. The point of this account is to save for retirement, not use it as your everyday piggy. Well, let's keep it halal camel bank, right? So no piggy bank, but so it's not like your personal whatever. It is if you're leaving it for a long term. It's not your everyday checking account. So the point I'm trying to make is, don't take the money out, or else they'll hit you with a 10% penalty before age 59 and a half. It's very simple to open one, and you can choose your halal options. So that's that. And then the next one's Roth IRA. I already kind of touched on this and within the 401k platform. However, and this, you can do this on your own, right? You can open an IRA outside of your 401k. And again, same contribution limit, $7,000 and $1,000 if you're over 50. The only difference here now, again, this is where the IRS comes in and says, this is kind of like a loophole for the rich people. So they also put in these limitations on your income. Not on your income, but how much, if you could even contribute. So if you're over this 190,000 through 220,000 as a joint, if you're married filing jointly, you cannot open this kind of account. However, there's something called a backdoor Roth. Okay, so why do people do backdoor Roths? Well, the way it works is you're opening a traditional IRA, which is what we just discussed, the slide before. And when you decide to do what they call a Roth conversion, that's the process of doing a backdoor Roth. You can convert the money that you have in your traditional IRA. You could only do it once every year. Okay. So let's say you have $10,000 in your Roth IRA, in your traditional IRA, you open that. Again, there's no income limitations on the traditional. So therefore, anybody could do it. I could be a guy who makes $1 million and I could open that traditional IRA with whatever money, but I'm still capped though at 7,000. So let's just say over a couple of years you accumulated that account. Maybe you put in $3,500 and $3,000. Let's say that account value after 2 years is $10,000, and you're like, you know what? I want to convert this to a Roth. You can do that. So then you open a Roth IRA. You do a conversion, a Roth conversion. So they'll take their taxes up front on that contribution, like we talked about, and then it goes into a Roth account. That process, again, was called a backdoor Roth. So now it's sitting in a Roth. So now you can continue. It'll continue to grow. And when it comes time to take the money out, it will come out tax-free. The distributions are tax-free. Same thing with the IRS penalty. Cannot touch it before you're 59 and a half. And this one also, you could select halal options. It's self-directed. Okay, these are for more of our business folks, anybody who has their own business or self-employed. If you want to start a retirement account for your company or for your employees, so businesses fewer than 100 employees, a simple IRA would be a good way to go. And you have the option of matching the employee contributions. So let's say you have a doctor's office and you have a staff of 25 folks. You could start this up for them, for your, let's say anybody, the nurses or whoever's on payroll. All right. And so, there's some contribution requirements from the employer. So you are the employer, so you would have to follow one of these two options here. Eligibility, there's no age restrictions. They must be earning a minimum amount. It says right here, specified by the employer. Any 2 preceding years, and they expect to earn at least $5,000 in the current year, right? Anybody who's making at least $5,000, okay? And employees can contribute up to $16,000, okay? But employees are not required to contribute. So if you say, I don't even want to participate, that's fine as an employee. SEP IRA is probably a more popular one. This is more for and it stands for self-employed pension. IRA, individual retirement account. This account is popular amongst folks who don't really want to set up an account for their employees. It's more about themselves. So you, in this case, are the employer and the employee. So you set this up as an employer and you are setting it up as an employee. So you are working for yourself. And then there are people like this, especially folks who are higher earners, because they can put a lot more money away. So it's up to 25% of the participants' compensation, or $69,000 in 2024, whichever is less. So hey, look, you have the opportunity to put away $50,000 a year into an account like this. You'll do that because you'll have the ability to grow your money instead of just leaving it around in a checking account. And for this eligibility, you have to be over 21 and earn at least $750. This was for obviously 2023, and have worked for the same employer in at least 3 of the 5 past years. So 3 out of the 5 years you have to have worked at the same place. Okay. This is some of the services I offer: goal alignment, tax strategies, asset allocation, equity compensation, retirement planning, and philanthropy planning, estate planning, tuition planning, real estate strategies. And also I do take a look at portfolios to help them make it Sharia compliant and help them with purification. I do render services and recommend partners where, again, I'm not a sheikh here. I'm not a religious scholar. I'm more here to help grow the money as a financial planner. You lean on me for that, and any other religious questions, I refer back to my scholars, my sheikhs, and anybody who's again, I'll guide you in the right direction. People are always looking for CPAs or estate planning attorneys. I work with a group of very well-established Muslim estate planning attorneys who focus just on Sharia-compliant planning, and that's very important because specifically when it comes to inheritance laws, our religion's very strict on it and how inheritance should be handled. So those are things that we should keep in mind as well. And before you invest, always invest with caution. Each fund comes with a prospectus. Read that, make sure you understand it. Always talk to your financial advisor. Always have a professional that can help you understand things that you're not familiar with. All mutual funds specifically have operating costs, and ETFs. ETFs tend to be more or less. There's no load funds and there's load funds where they charge a chunk of your sales fees up front. At JP Morgan, I used to work with a lot of those kind of funds. So familiar with that, but now we're in a different landscape, and alhamdulillah, there's a lot more cost-effective options to invest. And then you examine always the objectives, risk, expenses, performance, portfolios, and the advisors, and the services of the fund, and always seek professional advice. From successful folks and professional advisors. Don't listen to your cousin who's a doctor who's busy 9 to 5 looking at patients but barely looks at his portfolio. All right, there's a little snapshot about me, and my contact information is there. If any of you need to reach out to me, I'm more than happy to set up a meeting, a consultation to help you understand your finances, inshallah. With that, Jazakallah khair, Sheikh Navaid, for having me.
Jazakallah khair, Samir. Really appreciate it, man. Thank you so much. So just leave that slide up, inshallah, so in case someone wants to screenshot it. And now we're going to do rapid fire questions with you, Samir.
Sure.
Okay. So we'll start off light and easy. Your favorite restaurant in New Jersey?
Favorite restaurant in New Jersey, man. If I try to stay true to my OG roots of Samir's Eats, I'll always go to Kebab Paradise. But lately it's there's so much that has opened up. But I will. My all-time favorite I always go to is Kebab on the Cliff. I love Irani food, Persian food. So
nice. Actually, I even forgot to say this. So students, this is your opportunity to ask similar questions. I know a lot of you, or some of you, had some 401k questions that you asked last week. So this is your opportunity to ask Samir those questions. So you can type them in the text, and then I will ask Samir those questions. Second question for you, Samir. And again, class, this is not financial advice. Always consult your own financial advisors. Correct. Do you think the U.S. is going to be going into a recession anytime soon?
I mean, they always talk about a recession. I think they've talked about it, but again, we don't have a magic ball, crystal ball. Anything is possible. I've been hearing about a recession for probably the last 2 years, and we sort of might have tiptoed around it, but I think things are getting a little better from what I've seen. Although the interest rates, and so the way the markets are controlled is by interest rates and the money inflow and outflow, and so the government, the IRS and whoever, they get together, and they decide on whether, especially it's, around election time, that's when it gets a little bit tricky. So it's just, I recommend folks staying invested and not really paying too much attention to the noise, because I've been through a lot of these, the market's going to crash, and it's been crashing for the last 10 years, but I still haven't, look, 2000, to me, 2000. So those of you who were around in when the 2008 happened, all right. So that to me was probably one of the most devastating times in the markets, right? So because we had a bunch of bank failures, you had over leveraged mortgages, and so that caused a lot of banks to go under and sold at a discount, right? When I was at JP Morgan, there was a bank called Washington Mutual, who some of you might remember. From a profitability standpoint, they weren't the greatest company because everything was free. And I was a branch manager then. And so I remember I inherited their employees. A couple of their employees, had to retrain them and get on JP Morgan or Chase's platform. And so they would say, it was so better at Washington Mutual. Everything was free. I was like, yeah, that's exactly why you guys went under, because you gave everything away for free. There were no, at that time, like they had no fees. Like practically, if you bounced a check, it was all good if you did this. So anyway, but that's probably the worst time I've seen. If I haven't seen anything worse than that, then I don't really consider it. That's become my personal benchmark, to be honest.
That's the benchmark. Got you.
About 2008 as like a financial crisis. Now you've had other ones. 2001. You had 9/11. You also had 2015 in Europe, where Greece was falling apart. Their finances, their banks, everything was falling apart there. So that affected the rest of the world. You also had COVID. That was very short lived, by the way. I remember I was at Amana still, and markets started taking a turn in April of that year. It was 2020, I think it was April 2020, and then everyone was flipping out, taking their money out of equities and putting them into cash or whatever. And then, sure enough, 3-4 months later, when the vaccine started popping up, that's when everything turned around again. And the folks who took their money out were like scratching their heads, oh, we should have just left it. Mm-hmm. Well, so the moral of the story I'm trying to make is, as long as you're diversified, you have your money invested in proper things. And when I say diversified, truly look at your portfolio, make sure you're not concentrated in one thing. I get a call from people, oh, what about NVIDIA? What do you think about NVIDIA right now? I'm like, well, I think it's great, but were you there before? Yeah. So people start chasing that. So who knows, if you're trying to chase like 1 or 2 stocks and that's like where all your money's going, then I'd be very concerned because you're not diversified. You're and my answer to this particular client of mine was like, look, based on, I've looked up your holdings in NVIDIA, you're about 6.7% holding of your total portfolio. My recommendation always is not go beyond 10. So if you're trying to increase your holding in 10, I'll get more of that Sharia-compliant ETF that has the NVIDIA in there. That way you could have a little more exposure to it. But that's really the thing. Just try to be diversified, and just, if it's a long-term play, then don't worry about the noise. Markets will go up, they'll go down, they'll go up and down. We're not fortune tellers, and we're not, we don't have a magic ball here. We don't do any of that. We just place our trust in Allah and do our best here.
Jazakallah khair. Thank you so much, Samir. So we have a couple of questions for you. A random question for you. Are you related to Dr. Zubair Sarmast?
Yes, I am. That is my first cousin, the hand surgeon out of Canton, Michigan.
MashaAllah.
Give him my love.
Khalid, that's for you, bro. Okay, so now we have a question from Sister Rizwana. I think this may be a shared question between you and I, Samir. So she's saying, I have a 401k that has very small bond options in it that I cannot take out. It is part of the portfolio. What can I do about it? So is she correct in saying that in a 401k, you can't change your options?
No, so again, I would have to look at it, but you should look at where, so if you put it into a, maybe, and again, forgive me if I'm assuming, if it's a target date fund, then yes, there's nothing you can do with that, but you can get out of that target date fund and choose other funds that are equities only, right? And have 0%. Now, there are some companies that force you into a little bit of fixed income because they're trying to be fiduciaries and they're trying to be responsible, right? So what does fixed income mean? It means conservative, right? Conservative investing. So when you put into a bond, it's not as volatile as a stock. So putting into a bond, they want to see a small piece of the portfolio there. I'm more than happy if you kind of want to share your screen one day and kind of poke around. Can help you look at what I'm looking at, okay, and what I'm looking for specifically, because every company is different. I don't know until I see it, but I would say look at that, and if you're having a little trouble finding that, maybe ask somebody there. Is there a way I can change my investment and make it 100% equities? I don't want any fixed income in here, and just go from that route. If it's not working, then just reach out to me.
Jazakallah khair, Samir. We have a question from Kalsuma. She's saying, I have a Vanguard account, but my workplace has a partnership with Fidelity. Do you recommend just keeping both accounts separate and investing in both to get the employer match?
So wait, I guess I'm not following. So you have a Vanguard account with the employer, or that's something on your side on the side? And then you have a Fidelity who has the 401k. Is that?
I think let's see if she gives some more details.
Yeah.
Yeah.
Or is it like I had an old 401k somewhere else with Vanguard, and then now my current employer has Fidelity? I'm trying to understand if it's the same employer, or what's the relationship with Vanguard?
Yeah. Samir, are you able to see the comments on the screen?
What am I seeing? No. So hold on. Maybe I have to stop my screen. Maybe.
Actually, you'd have to stop sharing because for some reason my screen has frozen, so I'm unable to scroll down anymore.
Okay. Let me see here. Stop screen. Okay. You are great guy here in Michigan. Will do. Okay. Yeah. Now I'm seeing it.
Okay.
Alrighty, awesome. I am not seeing the. Hold on, let me see. Oh no, I do see the comments now. Okay.
Okay.
Vanguard personally and current employer has partnership. Yeah, so Fidelity is running the 401k. What you can do is current employer. So Vanguard personally, then you have an option of like choosing whatever. If that's personal, it's whatever you do. No one's forcing you to do anything. The current employer, that's where you want to reach out to them and say, can I, and Fidelity's pretty good. They offer that, the self-directed brokerage account. So I would reach out to them and ask them, can I open a self-directed, and then you can create a Sharia-compliant portfolio within that. Yes, and Khalid Kirfan is saying I work with Fidelity, so they're pretty good with that from what I remember. And so with your Vanguard, that's something that you could just switch out of, and since you're not under any restriction there. Would you consider the sufficient diversification, half in real estate, half in a single? No, I don't think that's sufficient. Real estate should really be like, and again, we could talk offline about, your individual goals and your risk tolerance. See, the one thing people don't understand is they think like there's like a one, of course you could say, hey, put into an ETF of S&P 500 or something that mirrors, an index and let it go. But sometimes that's, a lot of people can't stomach the risk involved. So that's things we need to discuss. Everyone's all about like getting the 20-30% returns, but then when they're down 3%, they're flipping out, so you got to understand there's risk on both sides of the coin. So the more risk you take, the more you should expect if there's a down market. I worked with okay, so we got that. Ahmed Khan. Anybody else? I think and Rizwan, I'm seeing Jazakallah khair, so wayakum. I think that's what all I've seen in here.
Sorry about that, Samir. I got disconnected.
Yeah, no problem. Yeah, no problem. I'll be in Michigan most likely in November because his niece is getting married. So Thanksgiving.
Excellent. So, Samir, I think that's it for the questions, inshallah. Jazakumullah khairan once again. Samir, do you want to leave your contact information in the chat box, inshallah?
Yeah, sure. Something came in for any tips for short-term? Short-term investing, it depends on what short-term means. It's relative to one's perception of short-term. So in my world, short-term is considered anything under 12 months. Because then you have short-term capital gains involved, and so there's different tax rates for if you're invested under 12 months and over 12 months. So over 12 months considered long-term. So there, I don't, you can reach out to me. We could talk about kind of what your thoughts were, but I typically don't tell folks to invest in the market if they have a short-term time horizon. So just because there's people that are maybe saving up for something important. And then let's say like you're trying to buy a house, you have, let's say 100,000 saved up for this house, and then the market turns out to be April of 2024, right? Which just happened. And the markets were down about 3 to 5%. So now let's say it's 5%, you're down to 95,000. Are you going to be happy with taking a $5,000 hit and you need that money at that time? Probably not. So best thing is just kind of keep it off the sidelines in cash and some kind of a halal. By the way, I think UIF is offering some kind of a halal 4% or some kind of rate. I was reading about it. Pretty much they're giving you a rate of return that's more conservative. So maybe an account like that would be most likely better than investing in the market. And wayakum Sarah for your comment. All right. And then I'll leave my contact there.
Please, that'd be great. So while Samir is doing that, folks, I'm going to share what I promised with you guys last week, which was how do you build your home in Jannah? And I want to share with you a few ways as to how to build your homes in Jannah. So when we were discussing, Islamic financing for our homes, I emphasized the fact that not everyone will be able to buy a home in this life, but just because that's the case, make sure that you don't miss out on the opportunities to build your homes in Jannah. So the ways that I want to share with you, number one, is that when you're praying in congregation, fill the gaps in the prayer. The Prophet sallallahu alaihi wasallam, he says, "Man sadda furjatan bana Allahu lahu baytan fil jannah rafa'ahu biha darajatan." Whoever closes the gaps in prayer, Allah subhanahu wa ta'ala will build for them a house in Jannah and elevate their status. Number two, visiting the sick person. قال النبي صلى الله عليه وسلم من عاد مريضا أو زار أخا له في الله ناداه مناد أن طبت وطاب ممشاك وتبوأت من الجنة منزلا. That the Messenger of Allah sallallahu alaihi wasallam said, whoever visits a sick person or a brother of his that they seek the pleasure of Allah, an announcer from the angels will call out, may you be happy, may your walking be blessed, and may you be awarded a dignified home in Jannah. Number three, praying your sunnah prayers. قال النبي صلى الله عليه وسلم من صلى في اليوم 12 سجدة تطوعا بني له بيت في الجنة. That whoever observes 12 voluntary rak'ahs, Allah subhanahu wa ta'ala will build for them a home in paradise. So what are these 12 rak'ahs? You have 2 rak'ahs before Fajr. Then you have 4 rak'ahs before Dhuhr and 2 rak'ahs after Dhuhr. Okay, so that's 8 right there. Then you have 2 after Maghrib and 2 after Isha. That is how you make 12. Some of the ahadith will mention 10 rak'ahs in a day. The only difference is instead of 4 before Dhuhr, they say 2 before Dhuhr. 2 before Dhuhr. Number 4, building a masjid. قال النبي صلى الله عليه وسلم من بنى مسجدا لله بنى الله له في الجنة مثله. That whoever builds a masjid seeking Allah's pleasure, Allah subhanahu wa ta'ala will build for them a home in paradise. Number 5, قال النبي صلى الله عليه وسلم من قرأ قل هو الله أحد 10 مرات بنى الله له بيتا في الجنة. That whoever recites Surah Al-Ikhlas 10 times, and this is ideally 10 times in one sitting. If you can recite Surah Al-Ikhlas 10 times in one sitting, then Allah subhanahu wa ta'ala will build for you a home in paradise. So those are 5 ways that inshallah you can build your home in Jannah. And I'll share one last way with you, which focuses on your akhlaq, which focuses on your character. That the Prophet sallallahu alaihi wasallam says that whoever controls their anger while they're able to act upon it will get a home in the lowest level of Jannah. Whoever gives up lying while joking, Allah subhanahu wa ta'ala will build for them a house in the middle level of Jannah. And whoever strives hard to perfect their akhlaq, then Allah subhanahu wa ta'ala will build for them a home in the highest levels of Jannah. Allah subhanahu wa ta'ala grant us all of these homes in Jannah. Allahumma ameen. And inshallah, I'll share this article for your reference. The ones that I have quoted for you are definitely authentic. The ones that I did not quote, I am refraining from commenting on their authenticity. Bi'idhnillahi ta'ala. So my dear brothers and sisters, this will bring us to a conclusion to our class on money matters. May Allah subhanahu wa ta'ala bless all of you. May Allah subhanahu wa ta'ala make this knowledge a proof for us and not a proof against us. Inshallah, this is not the end of our journey together. I was given the good news that I will be teaching the fiqh of nikah and talaq next semester. So I'm hoping that you guys will join me for the fiqh of nikah and talaq next semester, even if you are already married or even if you are already divorced. May Allah subhanahu wa ta'ala grant you all righteous spouses. Allahumma ameen. It's been an honor and pleasure to be in your company. It is bittersweet, subhanAllah. It really, really is bittersweet that the class is coming to an end. But it's not an end of the relationship, right? So as I told the other brother, inshallah, if you'd like to stay in touch, please follow me on Instagram. Send me a DM over there. My DMs are only open to those that are following me. So if you follow me and send me a DM, inshallah, I'll get back to you usually within 24 to 48 hours bidnillahi ta'ala. And if it's anything related to this class, please send an email to admin@miftah.org. And inshallah, I'll respond over there bidnillahi ta'ala. As is our custom and our duty, if I've said anything to harm anyone or to offend anyone, I know sometimes I like to joke around with some of you. Please forgive me. I did not mean any offense and did not mean to harm anyone in any way. Anything that I've said that is correct is from Allah subhanahu wa ta'ala, and all praise is due to Him. And anything that I've said that is incorrect is from myself and from shaitan. Allah subhanahu wa ta'ala forgive me, and I seek forgiveness from all of you as well, inshallah. Love you guys for the sake of Allah, and inshallah hope to see you in the fall semester bi'idhnillahi ta'ala. Subhanak Allahumma bihamdik, ashhadu an la ilaha illa ant, astaghfiruka wa atubu ilayk. With a double salute to all of you. Wassalamu alaikum wa rahmatullahi wa barakatuh.